Hi, I'm Jenny Brown. Welcome to MFB News. I hope you're keeping really well. Thank you so much for joining us. We've got some really good stuff to share with you today. We've got some pricing changes from the lenders, some criteria changes, some really nice limited edition products that have been released as well for you. Then we're just going to cover off what's latest with house prices and finally just talk about what's going on with the cladding scandal as well. Okay, so starting off with some really nice news about a new product that's been launched by Paragon, which is on a semi-exclusive basis. What that means for you is that not everyone can access it. It's only available via a very limited number of brokers. Thankfully, we're one of them. Otherwise, it'd be a bit weird that I was talking to you about it. So look, the rate is really nice. It's a 5-year fixed rate at 2.99%. It's available 75% loan to value. It comes with a flat arrangement fee of $1,995. There is an application fee of $299 irrespective of the property value, but you do get a free valuation and £750 cash back. Now with this, I think the reason this product is so interesting is first of all it's available to both individuals and limited companies, but also it's available on the HMOs and multi-units. So in the last week or so, Paragon have made the fairly unusual, shall we say, decision to stop pricing differently for HMOs and multi-units. So now they're just classing everything under the same pricing bracket, which means that their pricing on HMOs and multi-units has come right down. So basically what it means is that you could have potentially a 20-bedroom HMO or a block of 20 flats on a 5-year fixed rate at 2.99% with a $1,995 fee, which is just incredible actually. Now in terms of Paragon and who they are as a lender and who they like to lend to, so they're definitely a specialist lender. They've been around for a really long time. They love lending to landlords, particularly portfolio landlords, though they're very happy to lend to first-time investors as well. You do need to earn £25,000 per year to take a mortgage with Paragon, but they don't mind how many properties you've got in the background. They're very happy, as I say, to lend on HMOs and multi-units. They're able to consider things like DSS tenants, housing association lets, corporate lets as well. So loads of really great stuff within the criteria there. And like I say, you know, just an incredible rate that's been released as well, which is available to individuals and limited companies. Lambay are another lender who in the last week has released some limited edition products. Now before I go any further, I should probably just explain what a limited edition product is. This is where a lender will say, okay, we're prepared to lend so many millions of pounds on this interest rate. Once we have applications in to the level that we're prepared to go to, we pull the product. So it's only available for a limited period of time. Now as brokers, wouldn't it be wonderful to know how long these rates are going to be available for? We just don't have that sort of information. Lenders don't share with us how much money they've got available to lend on any given product. So all I can really say to you on this is if there's something that's publicised as a limited edition product and you would like it, you kind of need to get on and apply for it and lock the rate in. So look, Lambay have brought out some limited edition 5-year rate remortgage only deals, which are circa 25 basis points lower than they would ordinarily charge. So their pricing here is starting from 2.95%. They've also made reductions not just on their standard property range but also on their small HMO and multi-unit product range as well, where the rates here start from 3.34%. So, you know, the rates are actually really rather nice. Available, like I say, on remortgages only. Minimum loan size on these products is £250,000 though, so just keep that in mind if these are of interest to you. Lambay is a lender, really good guys. Very much a specialist lender. They lend to individuals, limited companies, layered limited companies. They don't mind how many properties you've got in the background. Similarly to Paragon, and fairly unusually in that space, they do have a minimum income requirement of £25,000 a year though, so just keep that in mind. But like I say, look, some really healthy products there from Lambay, again available on a limited edition only basis. Aldermore have also released some limited edition products in the last week, which are really good, with pricing starting from 2.98% on a 5-year fixed rate at 75% loan to value. Now, Aldermore as a lender they've been around for a really long time. They don't tend to update their products very frequently. I was looking at their website and their product guide most recently in the last couple of days, and they last updated their product range on the well, it was back in August, so a really long time. So they're not continuously flicking products around, but what they have done is release these limited edition products which go live today, so on the 10th of November. The pricing is very good. Rates here will start from 2.98%, as I said, for 5-year fix, 75% loan to value. Look, no arrangement fee, free valuation and assisted legal fees. So the setup fees, in addition to the rate being good, are also very competitive. Aldermore as a lender can lend to individuals and limited companies. They can accept people with large portfolios, so there's no maximum number of properties in the background. If you're a first-time landlord, they do want you to be earning £25,000 per year. If you already have a buy-to-let, there's no minimum income requirement. And there's a whole world of other criteria that sits within their kind of requirements that are very, very good. Incidentally, one of the things that we find really good with them is their calculation on the background portfolio. So if you've applied for a mortgage and the lenders are saying, well, the background portfolio isn't working for us, these guys could be a good home for you, actually. Now, Aldermore have, on these limited edition products, they have two products, essentially. So one is for multi-property applications and one is for single property applications. So what that means is that if you are applying for mortgages on several properties, what Aldermore will do is scoop all of those properties up into one single application and run them as a single loan account. This is sometimes referred to as portfolio lending. Alternatively, they also have a product which is slightly more expensive, so 20 basis points more expensive, which is available if you're just sending them one single property. Now, in terms of the multi-property offering, some people really like this. Some of our clients, they really like the idea of it. It's one loan account, it's less paperwork, there's less kind of direct debits going out and all those kinds of things, which on an administrative basis are really, really nice. Other people don't like them because they don't like the fact that if you've got one loan secured across multiple properties and you sell off one property, does the lender want the loan to be reduced on a sort of pro rata basis relative to the purchase or sale price of their security? Or actually, are they going to want the proceeds, the whole proceeds of the sale back? So there is some kind of limitations there and some uncertainty as well. And the very short answer to that question is it just depends on, at the time the stance the lender takes, you'd need to approach them and say, I'm going to sell this property off. How will that impact the portfolio? How much will I need to give you to draw the loan down to make, I guess, you comfortable with the exposure that you'd have left to me after the sale. So look, really, really good product offering from Aldermore. You're probably wondering after all these last few weeks, me saying, oh, rates are going up, why we're getting all these really good limited edition products. And what this is really is a sprint finish from the lenders. They've obviously had a really good year. The mortgage market has been incredibly busy, as has the housing market. But obviously what lenders are now looking at doing is filling their hoppers for next year. Most of the mortgages that they underwrite now are not going to complete until 2022. And so obviously what they're doing is being mindful of the fact that, yes, of course, 2021 has been a good year for them, but what about 2022 when things are expected to be, a little bit quieter? So what they're doing here is really capitalising on the fact that they may have some residual, funds which they were able to buy in relatively cheaply, and they're looking to lend these out as quickly as possible to give themselves a head start into 2022. But in the round, the actual trajectory of pricing is still very much upwards, despite the base rate not going up early this month, and we'll come on to that in a bit more detail shortly. Okay, now just to give you a quick rundown on some other lender news from the last week. So first of all, Vida have reduced their expat rates and also brought back some limited edition HMO products. Very good, not probably the best in the market, so I'm not going to go into those in too much detail, but obviously interesting to see that they've brought some pricing down in some of the more sort of sector-specific parts of their pricing matrix. We've also seen the Cambridge Building Society temporarily withdraw from buy-to-let portfolio lending. I don't think there's any big dramas here. I think it's just they've been swamped with applications. They're looking at a way to kind of stave off business, and this is there. They've just decided to go temporarily on pause while they catch up. So we'll look forward to welcoming the Cambridge back into that space in due course. Now, the Leeds have returned to HMO lending. Now, Leeds as a lender, when we talk about HMO lending, I would say that they play very gently in this space. So what that means is that they can accept HMOs of up to 6 rooms. They can accept licensed properties as well, I would just add. They're not lending on or to limited companies, it's people only. The pricing is not bad. Actually, they used to be more competitive. What they brought out is okay. Rates are starting from 3.27. Being perfectly honest, there's cheaper products in the market for HMOs. So I guess really what they're probably doing at this stage is just dipping their toe in the water to see how they feel when they get back to lending in that space again. But look, you know what, actually, they're a good lender. They would be what I would class as a kind of vanilla lender, high street lender. So they're not looking for large portfolios in the background. They want you to have income that's not from property, all that kind of stuff. But look, if you've got 1 or 2 buy-to-lets and you're looking at buying an HMO, which is very small, in your personal home, and you've got income of 25 grand a year or more, these could be a really good home for you. Now, lastly, the Yorkshire Building Society have made some adjustments to their calculations in terms of how they do affordability on buy-to-lets. So the Yorkshire Building Society are a commercial lender who offer buy-to-let mortgages. So the approach they take is kind of amazing, and it's kind of limiting as well. So the reason it's amazing is because they are commercial underwriters. They really do have the ability to get under the skin of a transaction and lend on things that are really quite complex. And by that, what I mean is the kind of more complicated limited company structures, as an example. But what it also means is that they do underwrite things very thoroughly, and it can mean that actually, you know, it's not the quickest process, and also they can be more cautious with regards to certain things. And obviously the buy-to-let affordability has been one of those things. It's great to see they've kind of had a revisit to what they're doing there and increased their appetite for risk in that space. Their products are very good. They offer some really good longer term fixed rates, and as a lender we generally really enjoy dealing with them because they can take such a commercial view on cases. And that is the lender news for this week. Okay, so just moving on to the broader market, I just want to echo back to what I was saying a minute ago about interest rates and the fact, despite the fact I'm talking about all these wonderful rates lenders have released, what's going on in the broader market. So the average rates for 2 and 5 year fixed rate mortgages have risen for the first time in 4 months, but remain below the pre-pandemic levels. Now, this is according to Moneyfacts, who are a company who are essentially tracking lots of different data in the market, including pricing. And what they say, the average rates have risen by 0.04% month on month to 2.29% for 2 year fixed rates and 2.59% for 5 year fixed rates. But they do go on to just say that these are below the same period last year, where 2 year fixed rates came to 2.43 and the average 5 year fix was 2.7. Now, what can we take away from this? I guess this is kind of almost a shot across the bow in terms of what's going on. So look, the average cost of rates has gone up, but actually they're still lower than pre-pandemic levels. So if there's a message to be had there, I think that really this is a warning about what's to come, and actually now is really your kind of last chance saloon to jump in there and secure some good pricing before things really do start to escalate to a much higher level. House price news for you now. So annual house price growth increased to 8.1% in October, up from 7.4% in September, and that's according to the latest Halifax House Price Index. So the average UK property price is now at a record £270,027 after monthly growth of 0.9%. Wales is remaining the strongest performing nation or region with annual house price inflation of 12.9%. Northern Ireland has recorded its strongest growth in 4 months. House prices also continue to rise in Scotland, with the average price now up 8.6% year on year to £190,023. So in England, and the Northwest has returned to being the strongest performing region, 10.4% average house price of £205,881, which is also a 4-month high. London is remaining by far the weakest performing area of the UK, with annual inflation of just 0.8%, which is the lowest year-on-year rise in prices seen since February 2020. What can I say? The house prices continue to rise and are showing no signs of abating just now. Lastly for this week, an update on the cladding scandal. So a controversial scheme which was requiring leaseholders to pay towards the removal of unsafe cladding from high-rise blocks has been paused by the government, which is incredible news actually. So appearing before the Housing Select Committee, Michael Gove, the Secretary of State for Levelling Up Housing and Communities, said he was unhappy with the thinking behind the scheme, questioning why leaseholders should have to pay at all. So Gove has said that the government had a responsibility to help leaseholders who are innocent parties in this yet are being asked to pay disproportionate sums where there are individuals in business, some still in business, who are guilty men and women. Gove is quoted as saying that I'm still unhappy with the principle of leaseholders having to pay at all, no matter how effective a scheme might be in capping their costs or not hitting them too hard at any one time, and that he's going to bring forward new proposals to replace the scheme in the weeks ahead. Now, look, for those people who have a property, a leasehold property where there is problematic cladding, this is going to be absolutely incredible news. We have had clients coming to us saying that they've been asked to contribute towards the cost or pay for entirely the cost of making these buildings safe, and it's running into the thousands of pounds. which ultimately, you know, why should they be paying for this? They bought the property in good faith. The building would have come with the right sign-offs, which were originally agreed how they should look to make, you know, what is a safe building. These are things that were set by various government schemes, so why on earth should these people be paying? So it'll be interesting to see how this shakes out, whether Gove's going to be sort of going after the developers or someplace else, I don't know, but it will be interesting to see how this lands, and obviously this is going to be really welcome news for a lot of leaseholders around the country, so we'll keep you updated on that as news comes out. And that is me for this week. Thank you so much for joining me. I hope that was interesting and helpful, and I'll be back again at the same time next week. But as always, if you have any questions, please do give us a call, 0345 345 6788, or have a look at our website, mortgagesforbusiness.co.uk. Look after yourselves, and I will catch you again next time.